All right, guys, this is an educational video and it is about fiscal policy. So, fiscal policy is simply about how a government uses its budget. Every government has a certain allowed limit, certain budget which they have to use, and a fiscal policy definitely impacts money supply. Consequently, it impacts inflation. Consequently, it further impacts interest rate, and eventually, all of these in a sequence will event the currency value. I'll give you a very simple example to make you understand what is a fiscal policy. For example, you may have heard of the debt ceiling, and debt ceiling was recently increased in the US. What is the debt ceiling? So that every presidential administration is allowed a certain budget by the Congress, under which they have to work and they have to spend that money for welfare of the people to run the entire country. And sometimes you may have heard that the government goes out of money, or they have to increase the debt ceiling. They have to allow they ask for the more money. So what happens in a fiscal policy? Let's say a government actually spend money allowed in the fiscal budget in such a way that it creates money supply. Let's say they make a scheme for welfare of people, let's say healthcare or anything, and they overspend the money. When they spend money in in any scheme for welfare of people, then it creates money supply. And the money supply eventually can end up in printing more money. Printing more money, money supply will do what? It will increase inflation. In other words, it will devalue the currency. When it will devalue the currency, or it will increase the inflation, what central banks will do? Central banks will offset this by increasing the interest rate. For example, if my money value of my money is going down by, let's say, 6%, I will at least expect my bank to give me 6% interest rates. That is why bank has to increase the interest rate. And then this will increase the currency value. So currency value initially will decrease by the money supply, then it will increase by the interest rate decision if the decision was taken to hike the interest rate. So this is how fiscal policy works. In simpler words, monetary policy is where banks make decision to adjust the quantitative easing, or the whatever adjustment that they do can be defined as quantitative tightening or easing. Bond purchase program is part of that, which we will include in other videos. But right now, fiscal policy is how a government spends the money allowed in a fiscal budget. So that's all. Uh, a recent good example was UK mini budget in 2022, and we all witnessed how GDP, Great British Pound, reacted to that mini UK mini budget in 2022. So that's all in short. If you want detailed explanation of fiscal policy and detailed education on this, you go to our website, 25noobsters.com, click on education in the site menu, and you will get all the details. Thanks for watching.